right, I'm just going to come back to you. Rajiv Agarwal, CEO and Managing Director at Essar Ports, I'm told, is with us right now. Rajiv, good morning. Great to have you with us here on the show.
Hi, good morning.
I'm sure you've looked at the Bank of America Merrill Lynch report, Rajiv, talking about...
Yes.
Yeah, so what do you make of it?
Well, I think, you see, we have had several research reports in the past, and definitely the stock has been a bit undervalued because of the market conditions. The company has done extremely well in the first 6 months, and I think, the report reflects that kind of buoyancy which is there in the business going forward. So that's what I can say.
But what do you think is the reason? I mean...
Well, the reason is basically that, the company, if you see the half-yearly results, we have increased our top line by 56%, and, EBITDA has gone up by almost 72%. So now we have an EBITDA of almost 450 crores in the first 6 months. And, the whole year looks pretty decent. So looking at that, the company is in for a re-rating in terms of market capitalization.
Do you see your dependence on SR Group companies as a big positive, as a big plus in terms of...
See, we have the benefit of having,
Let me just complete that. Or do you see that as not as a liability, but as a factor which lets investors be a little more...
No, on the contrary, I feel that it's a big plus for us, because in today's uncertain times, if you have the benefit of having very strong customers, and we have customers in all the fields like power, steel manufacturing and refining, which contribute to major cargoes at the Indian ports. Almost 60% of the Indian port cargoes comes from these sectors, and if we have these customers, I think this cannot be a negative. It has to be a major positive, especially where we are in uncertain times. I think this is a big positive, and based on that, we have a huge growth plan. We have a good visibility of from 88 million tons to 160 million tons, and the cargo is expected to grow from 40 to 120 million tons by 2015. So it's a decent run, and we are looking at a 30% third-party cargo in this period by 14-15, which again is a very healthy number. So I don't see there is any concern on that front.
Sure. Rajiv, could you throw some more light? Bank of America also says that, you've got the lower risk to revenues through take-or-pay contracts. Could you throw some more color on the same?
See, what generally happens is that when you make a dedicated facility with an anchor customer, you are taking a risk of building a port, which is a huge investment. So you generally get into a contract where there is, if they do not give the promised business, then they still pay for it. So it's a take-or-pay contract, which is there in the initial years, which helps the company and both the user as well as the service provider to build a facility and have the benefit of it. So, for example, in case of Essar Steel or any of the Essar Power, we are building a port for them, and we have a take-or-pay contract which is based on a minimum threshold level, which ensures that we have revenues during the initial period. After a few years where the uncertainty is over, then of course you can exceed the volumes over and above the take-or-pay volumes. But in the initial years, it definitely helps us to build a very strong case for financial closures, for generally removing the uncertainties which may be there.
So currently, all your revenue stream entirely is on take-or-pay?
No, it's not like that. This is, we have 5 ports. Currently, we are operating 2 of them. 3 of them are in building stage. So, in Essar Steel and Essar Oil, there we have current operations. In case of Essar Steel, there is some take-or-pay contract, which is, which is there, and Essar Oil is operating at full capacity, so and they are expanding capacity. So there we are having normal volumes which are there. In case of Essar Steel also, the volumes are pretty healthy, and they are on the increase. So it is only in the initial 1 or 2 years that the take or pay kicks in. Otherwise, it is normal operation.
Right. Rajiv, quickly before we let you go, some projections from your end in terms of your EBITDA margins, what your port capacity is likely to rise to.
Yeah, port capacity is expected to grow from 88 million tons to 158 million tons by by March 2014, and we are expecting volumes to grow from 40 million tons last year to about 120 million tons by the year 14-15. Also, the EBITDA margins were about 74% last year. This year they have seen an increase at about 81-82%. But we feel that going forwards we would expect something in the range of 75 to 77% is a very good EBITDA margin.
Rajiv, thank you very much for joining in and throwing some more light in terms of the business and operations of Essar Ports and how it is likely to shape up in the coming few months as well. Coming few quarters, I mean. 3 odd minutes left to go for market opening.